Good day. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday, the 28th of October, 2019, just around 3:30 p.m. Central Daylight Time. I can already tell you, you're trading just about at the settlement prices that were determined today at 12:30 p.m., and that's what time they determine the settlement price on the metal markets, and then they trade until 4 p.m. Central Daylight Time. Dollar index down a little bit, up in most of the currencies except the yen against the dollar. And as you can see, the stock market, especially sitting here, as you look at the S&P, went for an all-time high today. The Dow's not there, but the other markets knocking on doors and coming on very strong. The interesting part was you still have higher U.S. interest rates coming on. Interesting day. So let's take a look, if we could, at this gold market and see what it's been doing. Because when you look at a weekly chart, it's been trying to give a correction. And that correction keeps staying over the 18-week moving average of closes. Support there comes in at the 1480 level. It's been climbing all the way through. Now, where it finished, and let's take a look at the weekly close. The market finished off on Friday at 1499.50. So far for the week, we're down about $8 when you look at a continuation chart. That's different than the D Gold. So just take that and understand where you're at. The market had rallied back last Friday to the 1520 area, which is fraught with what? Resistance from previous rallies. Pulling back in, it's got support between the 1480 level right to where it's at. When we look at the momentum of the market basis the swing line, it looks for a pattern on swing line to see if you're trending. Now, an uptrend is defined on the swing line as having higher lows and higher highs. Bear market, lower highs, lower lows, and no trend is having a higher high and a lower low in some sequence. Well, what you have right here is higher lows, higher highs. I think you'd agree we're in an uptrend at this point in time. Take out the 1490.40 and you end up with a higher high, lower low. I filter this with key moving averages. Now, I consider the 18-day average of closes one of those keys. The other's the 100 and the 200. That doesn't mean I don't use intraday moving averages. I do, for those of you that are subscribers to my morning subscriber update, when I show you 40 futures charts and 3 to 5 ETFs, you know that I do and you know which ones. I'm not going to put them out here for the people to know that. But suffice to say, this is a very important zone. On the close today, you're under it. So you're in the 1495.5 zone on the close. So that you have now the bias is I determined by relationship of settlement price to the 18-day average of closes is down. We have the trend up with higher lows, higher highs. What else do we look at? We should look at Bollinger Bands. Well, in the Bollinger Bands, you hit the upper Bollinger Band the first time on Friday, got thrown back today. Tomorrow, if you go down to the Bollinger Band of 1481.30, the question is, will that hold the market? And that's if you get down there. And to get there, you got to break the trends. You got to get through 1490.40. You have two layers of support, 1471.30 to 1481.30, the 100-day moving average, and the lower Bollinger Band. To get the uptrend going again, ideally, you want to take out today's high of 1510.80 and run back to that Bollinger Band. So you're in a stall area right here, and you almost see that stall coming in on the slow stochastics. The market, instead of holding well at the 18-day average, didn't do that great a job of it today. When we come to GLD, we have a pattern of a higher high, lower low, not trending. Now, I'm going to come back here a little. Often you'll hear me say, in fact, just about every time, the first challenge of a Bollinger Band is where I think pros take some money off the table. So here the market goes to it on Friday, and today you get the correction back down. I think the pros came out of portions of their longs, could be all, I don't know what they're doing, but that's what I teach and that's where I think they're at. So now the question is, with the settlement today at 140.64, the bias is down just like in the futures, you're under the 18-week average. Momentum is flattened out here as measured by the slow stochastic. When we come to GDX, you never had the strength to get all the way up to the Bollinger Band. Sad, but didn't do it. Market came back down today and got itself caught in this, it tried to hold the 100 and the 18. It couldn't hold either. it settled under it. So the bias is back down. You're not in a trend. You got a higher high, lower low. It's very much still sideways action, not trending. The gold-silver ratio continues to favor silver gaining on gold prices. That's what this measures. So up here you needed 91 ounces, 89 ounces, 87 ounces of silver. In a perfect world, you put it in your shopping basket, you go to a store and you say, give me an ounce of gold. No commissions, nothing else. And that tells you what that ratio is doing. Typically, my experience has been that in real bull markets in the metals, when they take off as a group, silver leads the way on gold. Gold may be the first out of everything, and that's often the case, and then the silver starts catching up. Let's understand it. Silver is not, in my opinion, a true precious metal. Look at the price of palladium. You want to see something that's really got value? You've got the higher lows, higher highs. You pulled back today. Now, settlement 1785. On Friday, the first challenge of this number, you got way up here. You got thrown back, and today you're just proving that you've got this narrow range. What the market does in here is going to develop the next big move in silver. In the copper market, I think the factor that you've got Chile still, and I'm talking the country of Chile, still in total chaos. I mean, there's strikes, there's riots. The government there is throwing out everybody that's on the cabinet, bringing in another one. The percentage of people that approve of the current government, I'm talking the president, 14%, the lowest in 30 years. It's problematic. And being a producer, the large one of copper, well, obviously when there's supply issues, and there are strikes at the ports, and there have been strikes at the mines now. That's what I think it is. I've said this repeatedly. It's a supply issue, not as much a demand issue. You have an embedded reading. Until it gives up its ground, I say to pros, buy this on the breaks. In the platinum market, again, you ran up to the upper Bollinger Band. First challenge of it. Finished that day at 922.40 strong. Stayed over it for another day. Now you're starting to show your weakening problem, and today you're just back under it. It's not the end of an uptrend. The market got ahead of itself on the upper Bollinger Band. 95% of the time, you'll trade within these bands. So when you get over it, unless you get one of these runaway markets, and if you play for that, God bless you. It's like winning the lottery, but more times than not, it doesn't do that. So the market pulled back in. Well, this isn't an uptrend. You still have higher lows, higher highs. What bothers me is look at how overbought you are, very overbought. So getting a pullback makes all the sense in the world to me. Then here's the strongest of the metals, and I know I've been telling you this over and over. You keep running the upper Bollinger Band, you get breaks in the market, but you've been staying with an embedded reading, and this market on the breaks is unable to do anything and staying any amount of time under that 18-day average of closes. This is obviously a very high price. This is the highest price maybe ever, I think, for palladium. The problems that the market encounters is, number one, supply demand. This is out of South Africa rather, and this is out of Russia. Number two, there's no alternatives for this, not a good one. And I don't think the car companies are going to invest in it. Why? They're going electric. Doesn't require as much. So I think this market's interesting. Dollar index, this is a bear market rally by my judgment. You'd gotten under the Bollinger Band. You've kept the pattern of lower highs, lower lows, and that changed right through here. This outside day up changed the pattern to higher lows. You have a higher high, but you're under the 18-day average. You lose the embedded reading. When you lose that reading, prices often say they want to make a run, to me at least they say that, towards the 18-day average of closes. Where I'd be wrong in that thinking is get under the most recent low. Hasn't happened, and this market, we'll see if you can get up to that number or not. My stock index video. Remember, I did a special report last week. It's only got a day or two left, and then it's off the website. So if you're interested in seeing price counts, seasonals, 5, 15, 30-year, what they do, and there's a lot of new counts coming up in this. If you're interested in seeing what quarterly, monthly, weekly, and daily charts look like and where the targets seem to come in, well, I covered it as best as I could in this report for you. And the report, as I said, is a video report. And the reason I got away from writing is, number one, I can control it. I don't like my reports passed around. Number two, I can do a lot more with the video for you. It becomes interactive. You can pause it. You can see what it's doing. You can go to full screens in areas. I think that helps you with the charts, looking at a static chart on a piece of paper. But what I do is they're only good for 5 days at a time. And the reason is this is the futures market. I'm not talking long term. I'm talking what I'm viewing in this market over a couple-week period at most. How do you get it? Just go to our website. Under the word research, you're going to see special report. Take advantage of it. I'm Ira Epstein. You have a good day, and I will see you all tomorrow.